trading and looking for some effective tips to get started? Well, you've come to the right place. Today, we're going to explore the top 10 trading tips to know before you plunge into the exhilarating world of financial markets. We'll cover everything from the importance of self-education and goal setting to the value of developing a robust trading plan. We'll also delve into risk management, starting small, diversifying your portfolio, and the vital role of emotions in trading. Plus, we'll touch on the art of discipline, the blend of technical and fundamental analysis, and the significance of learning from your mistakes. These tips are designed to provide a solid foundation for anyone embarking on their trading journey. So, if you're keen to dive into trading, these tips will be your compass, guiding you towards informed and strategic decisions. Stay tuned as we delve into the top 10 trading tips to help you kickstart your trading journey. Tip number 1, educate yourself. This is the cornerstone of success in any field, and trading is no exception. Before taking the plunge into the world of trading, it's paramount to arm yourself with a robust understanding of financial markets. Get familiar with the ebb and flow of the market, the factors that influence it, and how economic indicators can shift the tide of trading. Next, explore different trading strategies. Are you more inclined towards day trading, swing trading, or perhaps long-term investment strategies? Each comes with its own set of rules, benefits, and risks. Choose the one that aligns with your goals and risk appetite. And speaking of risk, don't forget about risk management techniques. These are your safety nets in the volatile world of trading. They help you manage potential losses and protect your capital. Never stop learning. Stay updated on market trends and developments. Remember, knowledge is power in the world of trading. Moving on to tip number 2, set clear goals. Now, you might be wondering, why is setting goals so important in trading? Well, think of it this way. Imagine you're embarking on a journey. Without a destination in mind, you'll end up wandering aimlessly. The same applies to trading. Without clear goals, you'll likely find yourself making impulsive trades and straying from your strategic path. So, what should your goals look like? It depends on what you're aiming for. Are you interested in short-term gains, or are you looking at long-term investments? Your goals will shape your trading decisions, giving you a roadmap to guide your journey in the trading world. They'll keep you focused, preventing distractions from derailing your progress. Remember, your goals should be specific, measurable, achievable, relevant, and time-bound. This way, you can track your progress and make necessary adjustments along the way. Having clear goals in place is a cornerstone of successful trading. Tip number 3, develop a trading plan. A well-defined trading plan is like a compass, guiding you through the vast ocean of financial markets. It outlines your strategy, pinpoints your entry and exit points, and sets your risk tolerance and position sizing. It's the blueprint of your trading journey, keeping you disciplined and focused. Without a plan, you might get swayed by market fluctuations, make hasty decisions, or worse, let emotions control your trades. And we all know how that can turn out, right? It's like driving without a destination. You could end up anywhere or nowhere. So, take your time to build a robust trading plan. Think about your short-term and long-term objectives, your risk tolerance, and your preferred trading style. Keep it flexible so you can adjust it as you learn and grow. Remember, a well-crafted trading plan isn't just about making profits. It's about preserving your capital and achieving consistent returns. A sturdy trading plan is your roadmap to success. The 4th tip is to manage risk. Now, risk management may not sound like the most exciting part of trading, but let me assure you, it's absolutely crucial. You see, in the world of trading, it's not just about the profits you make, but also about the losses you avoid. And that's where risk management comes into play. Think of it like a safety net. It's there to catch you when a trade doesn't go as planned. One way to manage risk is by setting a maximum amount you're willing to risk per trade. This could be a percentage of your overall trading capital. Another fantastic tool in your risk management arsenal is the stop-loss order. This is an order placed with a broker to sell a security when it reaches a certain price. It's like having a preset exit point for a trade. Remember, it's not about avoiding risk entirely, but managing it effectively. In trading, managing your risk effectively is as important as making profitable trades. Tip number 5 is simple: start small. Entering the world of trading can be likened to stepping into a bustling city for the first time. It's exciting, yes, but it can also be overwhelming. That's why it's beneficial to start with a small trading account or even a demo account. This way, you're not risking a significant amount of your hard-earned money while you're still learning the ropes. Starting small allows you to gain experience and build confidence. It's like learning to swim in the shallow end before diving into the deep. It also gives you the chance to practice your strategies, see what works and what doesn't, and learn from any mistakes without suffering significant financial consequences. It's a safe and effective way to prepare for the bigger trades that lie ahead. So take baby steps first. Dip your toes, test the waters. Remember, Rome wasn't built in a day. Moving on to tip number 6, diversify your portfolio. Picture this: you're walking on a tightrope. Would you feel safer with one safety net or multiple ones scattered below? Just as those safety nets would protect you from a fall, diversification acts as a safety net for your investments. By spreading your investments across a variety of assets or markets, you're not putting all your eggs in one basket. This means if one asset or market doesn't perform well, it's not the end of the world because you have other investments that might be doing better. Diversification helps to mitigate risks and minimizes the impact of any single trade on your overall portfolio. It's an effective way to manage potential losses while still giving you the opportunity to make gains. Remember, the aim is to build a well-rounded portfolio that can weather the ups and downs of the market. A diversified portfolio is a healthy portfolio. Tip number 7, control your emotions. Emotions can often be the unruly jester in the court of trading decisions. They can lead you to make impulsive and irrational choices, causing you to stray from your well-thought-out trading plan. Fear and greed, in particular, can be potent triggers. Fear might cause you to sell off too soon, while greed could lead you to hold on to a position for longer than is wise. The key is to keep your emotions in check. Don't let the thrill of a win or the sting of a loss cloud your judgment. Stick to your trading plan and strategy, regardless of the emotional roller coaster the market may have you on. Remember, successful trading isn't about chasing every high or avoiding every low. It's about consistent, calculated decisions. In the world of trading, keeping a cool head is a winning strategy. Tip number 8, stay disciplined. In the world of trading, discipline is not just a virtue, it's a necessity. It's what keeps us focused, it's what keeps us grounded, and it's what keeps us successful. Without discipline, we're simply at the mercy of our impulses and emotions. When you've developed a trading plan, it's not just a suggestion, it's a roadmap. It's a guide to how you're going to navigate the often volatile and unpredictable world of trading. And like any roadmap, it only works if you follow it. That's where discipline comes in. Discipline means sticking to your plan, even when things get tough. It means resisting the urge to make impulsive trades based on emotions or external factors. It means understanding that consistency, not spontaneity, is the key to long-term success. In the world of trading, the disciplined are the ones who survive, thrive, and ultimately succeed. Discipline is the bridge between goals and accomplishment in trading. Tip number 9. Use technical and fundamental analysis. To make informed trading decisions, consider combining the power of technical and fundamental analysis. Technical analysis involves the study of charts, patterns, and indicators to predict future price movements. It's like trying to understand the language of the market through its historical data. On the other hand, fundamental analysis is about studying a company's financial health, industry trends, and macroeconomic factors. It's akin to knowing the story behind a company or an asset. If technical analysis gives you the what, fundamental analysis provides the why. They're like two sides of the same coin, each providing unique insights that the other may miss. Using them together can offer a more holistic view of the market, helping you spot opportunities and risks that one method alone might overlook. Balancing both analysis methods can provide you with a comprehensive view of the market. Finally, tip number 10, learn from your mistakes. The trading world is not a place for perfection, but a space for continuous learning. It's a journey where each step, whether forward or backward, is a treasure trove of lessons. When you stumble, don't just dust yourself off and move on. Pause, reflect, analyze. What happened? What went wrong? It's crucial to take a magnifying glass to your missteps, not to magnify your failures, but to identify the cracks in your strategy. Unearth the root causes. Understand the chain of decisions that led you astray. Then, armed with this newfound knowledge, make adjustments. Fine-tune your trading plan, tweak your strategies, refine your approach. Remember, in trading, it's not about never making mistakes. It's about transforming those mistakes into stepping stones towards success. Every misstep is an opportunity to learn, to grow, to excel. In trading, every mistake is a lesson learned. Let's wrap things up. We've journeyed through the top 10 trading tips to know before entering the market. We started by emphasizing the importance of education. Understanding the financial markets, trading strategies, and risk management techniques is key to navigating the trading waters. We then talked about setting clear goals, which serve as your compass, guiding your trading decisions and keeping impulsive trades at bay. We highlighted the significance of a well-defined trading plan, which acts as your roadmap, keeping you disciplined and preventing emotional decision-making. We discussed risk management, the safety net of your trading journey, and the importance of starting small to gain experience and confidence. We underscored the value of diversification in mitigating risks and the need to control emotions to avoid irrational decisions. We stressed the importance of discipline, the use of both technical and fundamental analysis for informed decisions, and the crucial role of learning from mistakes for continuous improvement. Remember, trading is not a sprint, it's a marathon. Stay cautious, manage your risks, and be patient.